City's a good team.
Ladies and gentlemen, welcome back. Chart Talk 107 coming at you. What we got? November 29th. Market had a little sell-off Friday. Got some of those gains back. So let's jump right into the market outlook. So as we were saying, we got a lot of hints that the market was ready to pull back. The beginning of last week, a couple weeks ago, whenever it was, when we kept making new highs in the market, but we weren't seeing it throughout the underlying stock action. We were noticing there's something like 60-70% of stocks within the NASDAQ were trading under their 200-day moving average. But yet Apple is continuously making a new high. That's a big enough company at this point to drive the whole market to gains. So we did get a lot of clues, and I didn't really get hurt in the sell-off. We tried, to be talking ad nauseum about how dangerous it is when leadership shrinks to only a few names. It usually precedes some sort of a market sell-off, or it's just showing that the underlying action isn't that great. 2 weeks ago, I guess it was, whatever it was, we were talking about how this time at highs, it kind of felt like we were at highs because all the breakouts were working. Then 1 week later, we kind of like backed up that stance in saying that, now we're only seeing Apple and these other names make the new highs, which is a huge warning sign. And then Friday, that came to fruition. The news comes out about the Omicron variant. I don't know if I'm saying that right or whatever it is. But the stocks were telling us way before that news hit the tape that there were problems under the hood. And that was just a little excuse for stocks to sell off and puke on a little Thanksgiving Friday when no one's paying attention. It was actually the worst Thanksgiving Friday in history. Did you know that, Bennett?
I didn't, but I'm not surprised because it was pretty bleak out there.
Yeah, well, I was eating leftovers, sitting all cash, just having a great time myself. What do you think about this market?
So definitely agree. I mean, a few weeks ago, things looked very good. We saw a little bit of a warning shot, but we saw kind of across the board, especially on Friday, where we haven't really seen, I'm talking more sector-wise, 3% down days across the board. We saw that in, virtually every sector was down on Friday except for biotech, which eked out like a very tiny gain. And we're starting to see, if we're looking at, the S&P, we had this little flag near highs that finally, it broke that support area, which we don't want to see. We see this with the consumer discretionaries, that now there's like 340 areas, the new area of support. And we saw this kind of, in a lot of other sectors, in the energy sector. All these sectors are basically just breaking support. And the last quarter, we haven't really seen that. And now this is the first time we're starting to see support break, where we may want to avoid some of those support buybacks until we have real confirmation. And just, looking back even at just the overall market, we've had a couple periods, even kind of September, October, we had like kind of that month of just kind of choppy trading as we kind of pulled in for that last leg. That was kind of just a month of difficult trading. We saw that in March. We had about a month where it was a little wishy-washy. And then going back to last September and November, that kind of quarter that we had a few little corrections that most kind of forget about. But my point is that we're getting these like very small pockets of just difficult trading. And maybe we're in this next 2 to 4 weeks where it's not the best, where if we can just sit in cash and be patient, it's much easier to do that and just let things wash out and reset than trying to battle with the market every day, trying to find some opportunities when it really is, slim pickings out there, I think, right now. I think just kind of doing less and just being patient is probably the best move than trying to force things when they're just not really presenting themselves at this time.
Yeah, no, it's a great point. And it's as simple as this. I got the S&P chart up and I'm circling that like September to October range. It's like difficult trading. They made that October-November run. It's like easy trading. And now we're getting into a little section of probably difficult trading. We don't have to chase every move. Early in my career, I thought I had to put risk on every day. Thought I had to find the one winner in the market. I have completely backed away from that, wholeheartedly, just to wait for the easy times. And I've seen, it do wonders for my account, and my mental capital, just not trying to be involved. Like I felt no reason to trade today. I was seeing nothing out there. We were gapping up 1%. Yeah, stocks made moves. There's always opportunity in the stock market. Always things moving around. But we want to stick around for the easiest opportunities, the most high risk reward situations where we're seeing sectors break out en masse, and we're just not really seeing that. We're seeing as you said, slim pickings. So definitely a good time to chill. I think that this week will be very random, very difficult. We were talking about it today at the end of the day in the chat, and everyone kind of collectively decided that we were gapping down tomorrow. It's like, well, why? The market market's goal is to frustrate the maximum amount of participants. We could absolutely gap and go to the upside tomorrow, but who cares if your setups aren't there, you're not working. So the need to be involved in every move is just only going to hurt you over the long term. So definitely glad you brought up that point about easy trading and tough trading, because this if you look at the last 5 days in the S&P, make a new high, pull back, then we do a little pivot, then we had a little green day, then we sell off, then we rally today. That's difficult trading. That's just very difficult trading. There's no way around that. It's just very random action. Now, I wouldn't be surprised to see us become, more of a range-bound market between this, SPY 450-ish, 455-ish, and those highs we just made, 470. If we just flagged out here for the next few weeks, that would be healthy action. So definitely more risk off for the time being. Most cash I've had in months, and honestly, no problem with it. Account sitting at highs. Where are we going from here, buddy?
It'll be probably the quickest top ideas that we'll ever go over.
Yeah, there's a few things that are looking decent. This my favorite out there is this SEDG, Solar Edge. So we look at this gap it's created. It was a previous resistance area. Now it's making a new support. Made this great move on earnings. Tried to break out on that day where the market broke out and pulled back. Now it's giving us inside that support. This one actually looks pretty good for an entry tomorrow through that 351 mark. That's one of the things I actually might buy. I'm keeping an eye on this GDYN. Just a very classic, earnings move, turning that all-time high resistance to support, and now flagging out on the daily. I would like to see, another week of consolidation here. I'm not buying this one for the breakout tomorrow. I need to see more. Definitely getting more and more picky. Where am I going? RGEN I like, but I don't think this one is getting up there too quickly as well. I'd like to see more consolidation here. And again, these names could go, and I have no problem with them going without me. I don't need to be involved in every move, as we were saying, but through that 300 area, that one looks pretty good for the next run. And then QDEL, Quidel Corp. This one's been sitting in a base for a while now. And then Friday, when the market was selling off, this one was, and you know what they do? We killed this last year. I wish I didn't bring this up. They do COVID tests. But you can't knock the chart. The chart looks great through that 153 area, coming out of that nice little base. There are a few other things I'm looking at, but those are definitely the top looking charts to me. And I wouldn't buy this one tomorrow either. I want to see more work here, more sideways in front of this level. So, nothing's screaming at me out of the charts. What do you got over there?
I got a couple. So first up is Zebra, ZBRA. Up through this 615. I took a trade in it a while ago, and I forgot I think we bought it for 520. But again, setting up now through it's blue sky, breakout through those highs, kind of versus 580. This is still kind of tight enough that I wouldn't mind taking this week because it's still not the craziest range that I'd have to be kind of putting risk on. Another one is this SSNC. I took a trade in this earlier or I guess it was last week, up through 80 and kind of got stopped at I think I lost 1% in it. Might still need to kind of shake out and come a little bit closer to these earnings day lows for now, but I'm just waiting for it up through 80. That's really just my main focus, is buying up through there. A few other ones. We have this Hershey's HSY up through that, kind of 182 area. Let's see, JBHT, another earnings flag, that 200/202 area. Keeping an eye on that. Of course, keep an eye on this AFLAC 58 as the 200-day continues to act as support. Putting higher pivot lows.
I can't wait till 2025 when this
AFLAC goes
to
50 and goes to 59,
and you're gonna be on vacation and you're gonna miss it.
Yeah. It's going to go during the Vermont trip.
Right.
Last two, this Mitch, near major support. We took a trade in this last time up through this kind of 135 area back in August, and it was a very decent, very good trade for us. So keep an eye on this as well. But again, not trying to buy 130 on the way down. If it wants to shake that out, I'm more focused on buying up through 140. And then lastly, this Goldman up through 420 in time. So a lot of names that are just kind of keeping an eye on kind of the best charts that I'm seeing out there. But really, that Zebra is probably the main focus for the week.
I cannot believe that Match.com, Match Group, MTCH, action after they got that news the news that exploded them, we were all in it. And it was like one of the best trades of my
and
life.
Completely, and then just reverses it.
Yeah. Just lost.
But same with Bumble. They both kind of had that crazy kind of reaction to the news, and both got kind of taken to the woodshed.
Bumble.
Passed. But I think the one thing that we may have overhyped with that news was more the Google Play Store. It wasn't like it was the Apple App Store as well. So I think that might have been something that us and maybe I believe it was just it was just the Google Play Store.
Oh, I thought it was the Apple App Store.
No, I think it was. I'll double check, but I'm pretty sure it was the Google Play Store, and it wasn't.
All right, well, glad I sold.
But anyways, yeah. Anyways, we made a mistake there. But anyways, all right. So those are some of the top ideas, and next up we have good and bad trade.
I mean, this is going to be a very quick chart talk for myself. I've been sitting in cash. We got that warning sign. I took that trade last week in Google. Did I talk about that on this chart talk?
This one, no.
I mean, on that last chart talk. I think I talked about this Google trade.
You may have.
And that was honestly the last thing I've done. I bought this little inside day and I sold it to strength. It doesn't look like much on a chart, but I was very heavy and that worked for my time frame. And I've just been sitting waiting ever since. My account's doing really well. No need to push it when the action's not there. So I've just been sitting in cash waiting for the next opportunity. I have no problem with it at all.
Nice. So I only have two quick ones.
Tough for this video. So
Yeah.
I'll start slapping the keys around so we have something to talk about during chart talk next week, all right?
Yeah. So I have two quick ones. The first one is MDB. This was a trade that we took earlier this month. We bought up to this 520, and it was just a very kind of an easy swing trade. We just kind of trailed versus low a day, and we took the 40-ish points from it. And as it came back in, this was just one I was keeping an eye on. I bought up on it on Friday. But this was one, even today, one of the members got in, and it just, this like little doji, this little bounce, like, my original stop was verse 480. I can give it verse kind of 500, but it's only going, 10 points in my favor in a $500 name. And there's just one that it's like, let me just take the money back and just wait and move on to, wait for something more substantial than just kind of this little kind of shot I'm taking. So nothing really crazy there. The one loser that was a little annoying was this ANIP. And the main thing with this was, again, first of all, me not knowing how thin of a name this was. So I got ticked in. I was trying to buy above the prior higher day. So I got ticked in this day, which I was okay with. But really the proper ad was up through 46. So I just got in a little bit too soon. Gave it versus that proper out versus that kind of earnings day low. And it looked good for the next 3 days I was in. Like, it looked fine. I had orders in to buy above 46. And then whatever day that was, I guess that was Wednesday, just bearish engulfing, just, pushed me out. And nothing, could I have had a stop below that, low a day and broke even? Maybe. But given how wide this name was, there was like a 50-cent spread in this name, like intraday, that it'd be very hard to like have that tight of a stop, where in a name like Aflac, you can have that stop to the penny and it's going to work because it's just a very thick name, where this ANIP was so wide that you could just randomly get ticked out, just by the spread in this name. So I had to give it the proper room, and this was just a trade. I probably lost maybe like 4% in it. But this is still one again, up to 46. I would probably still take it again. Just, that was my main mistake for last week.
All right. So we're not just like that. On to the book of the week, huh?
That's it, yeah.
So I'm reading this book called The Alchemist. My mother actually sent it to me, Paulo Coelho. This is a classic book. I'm just diving in. From what I can tell, it's I guess it's a fiction story, which is very rare for me to read any fiction. But my mother sent it to me, and she wrote a nice little note, so I'm gonna read it. But apparently, it's about realizing your destiny and stuff like that. It's about a sheep farmer who tries to learn. Alchemy is the art of turning something into precious metals or into gold, I think. Again, not that far into it. But I'll have much more on this next week. I have 7 pages to give you right now.
Yeah, I read that one a lot. I remember like the last page or two. I felt like ended off like it was pretty surprising. But definitely a classic.
Good to hear.
Yeah. So I've been reading 2 books, kind of like old finance books, and there's like the old trading books that like anything with Jesse Livermore or like Remnants of a Stock Opera, like the classic trading books that like just are always timeless.
Right.
There's always like nuggets of wisdom, and then there's the other older trading books that don't age well. They're in their era of time, and like there's really not much nuggets of wisdom.
Right.
The other one I'm not even going to mention. The guy's talking about if you talk about the era, it was like pre.com where he talks about putting money into safe stocks like Enron, so it's like completely just dated in that approach. And then and I was like I'm done reading this book. Like I had to like kind of skim through it because I just knew if that was kind of the premise, like that's But again, at that point, it was like 20 years ago when they were talking about Enron. That was like the biggest thing at the time. That was the Apple of that era.
In the world at the time.
Yeah. So it's funny where like looking back, it's so obvious, and now it's you try to think of what are those Enrons of today. But I won't even mention the title. This other book I started, again, another kind of data financial book, 7 Commandments of Stock Investing. I'm only like 40 pages in, but it's kind of that same premise. Like his is, don't diversify, over concentrate, hold for 10 years, buy on the way down, sell on the way up, type of stuff, which we don't really kind of drive with, but I'm going to keep going through it and see if I can find anything else that's a little bit more valuable. But the last 2 books haven't been too good.
Okay, cool.
Unfortunately.
It's cool. So I got 7 pages and I can't talk about the book, and you have 2 books that you hated. All right. And no trades to go over. What a chart talk, folks. Man, keep coming back and watching us every week because we're giving you the hits of the market every single week. With that, guys, I guess that's all we got. We'll see you next week. Like, subscribe, all that jazz, all right?